Well, good afternoon, investors. Welcome to our final bull session of September. It's final because it is September 30th, and we are ushering in October. And we have a lot of fun in October picking small companies, and many of the last several Octobers have actually been pretty good to us. As you probably know as an investor, September and October are the two most challenging months historically. So we kind of get through those. It's kind of off to the races, and we hope to see better days ahead. And we've had some better days for several months, so we wouldn't mind seeing that continue. My name is Mark Robertson. I am founder and managing partner of Manifest Investing, and I'm joined here by a dear friend. We have been doing this stuff together. You will know her as one of the featured panelists on our National Convention panel and guest damsel for the roundtable, Kim Butcher. Good afternoon, Kim.
Well, hello, everybody. Mark, it's a gorgeous sunny day here in Florida, and it's wonderful when it's, 85 degrees outside and not a cloud in the sky.
I was going to say we've had 80 to 85 degrees the last few days here in Michigan, and that's a treat this time of year for us. I know that will come to a crushing close here soon, but
yeah, an abrupt halt. Well, yeah, I was looking on the internet yesterday, and I went, oh my! Somebody posted in Colorado at the elevation of 10,500 feet, it was snowing.
Oh yeah. Yeah, we're enjoying. Wendy and I played tennis last night and had a great time. Great weather, and we're hoping for a couple more days of what we're currently experiencing, but we know it's going to get crisp, and ultimately there will be frost on those pumpkins. So I guess that's you and me celebrating in the pumpkin patch. Ken is absent with leave, as is Matt Spielman. They are off doing other things, so Kim and I will take us home here today. So welcome October. We're going to spend a little bit of time talking about the best small company hunt, featuring one of Kim's favorite sites, Dataroma, and just how you can drill into some other investors who have demonstrated an expertise in the small company arena. Quick update on a couple of portfolios. Go ahead, Kim.
Yeah, I just wanted to say there, Mark, that for our audience, to let everyone know, that website is www.dataroma.com. And the most important thing is it's free.
It's free. Yes, free is a good thing. All right, so let's go ahead and get underway here. You guys all know the drill. No investment recommendation is intended. We are going to be talking about real companies in real time. Everything that we do here is an educational demonstration. Specifically today, we'll be talking a lot about discovering people who seem to have a knack for discovering smaller, faster growing companies and investing in them. So we will be delving into that kind of stuff. Do your own homework about any company that we are talking about. That goes with respect to any opportunity or the tools that you use to make those decisions. We do urge you to do your own prudent, careful homework. So make your own decisions. If you would like copies of the slides, and some of them get a little bit busy, they will be posted on the Manifest forum for those of you that are subscribers. And if you would like copies of the slides, or if you have follow-up questions or topics, send an email to markr@manifestinvesting.com or kkavula1@comcast.net. Okay. Let's go ahead and get our Portillo moment out of the way here, Kim. The biggest news right now is that about a week ago, we found out that they're replacing their chief executive officer. So the CEO is perhaps on his way out. And as you look at that price chart on the far side, looks like it's nudging up a little bit. So maybe there's some interpretation or / hope that this guy is going to turn things around a bit. What are your thoughts on Portillo's in general?
I like the food. I know that they've said that they're pulling back on their expansion plans. not going to be as aggressive with that. I think they just need to make sure wherever they're putting their new locations and make sure that those locations are generating the revenue that they want before they start opening up even more.
Yeah, it's been my concern all along, and I think they did get maybe a little bit over their skis, driving their cash down a little bit, because those of you that weren't here a couple of weeks ago, Matt Spielman shared, on a pound for pound basis, how successful Portillo's is. And he was basically comparing them to entities like Chick-fil-A and Chipotle Mexican Grill. And again, pound for pound in terms of what they put out in food. So they are formidable. Again, don't take this as a recommendation. I think my cost basis, I know my cost basis for the round table is closer to $19 a share. So everybody say ouch with me. So we'll see. So that's our Portillo's moment. Do actually own a few shares. They are playful shares. Okay. Here's some of the stuff we got going on. Again, we will continue our hunt for the red rabbits. The pumpkin spice lattes are available on the street at Starbucks. Ken and I did spend the weekend in Cleveland, and oh my gosh, what a wonderful audience. As always, our audiences are always great, and Cleveland was no exception, even though they have beaten up on our Detroit Tigers quite a bit. But we spent a lot of time talking about a whole bunch of stuff. Sometime this week, we'll probably delve in a little bit deeper into General Electric at Manifest Investing. But just some of the stuff going on right now, and hunting down that kind of stuff. And again, I think this notion of Charlie's is probably going to be around for another week or so more. We are converting to value line data at Manifest Investing, and that project is probably 90% complete. And it will simplify things, and I think enhance the quality of what we do. And it'll be done simpler. So there'll be much more on that, but just be aware that that is underway. Any thoughts come to mind here, Kim? Are you a pumpkin spice latte fan at all?
I am not. I know. I don't go with, obviously, I never follow the crowd, do I?
In the minority. And that's okay. Different drummers. Okay. Mm-hmm. Moving along here. Here's a quick look at the stock market as we represent it by the Value Line Investment Survey. The green bars, which are locking in as we speak. Today is the last day of that quarterly bar on the far right, so we will actually come in above that long-term trend line, which we call reasonable expectations. So that will actually happen here today. I'm sorry that Ken's not here to see it, because he takes the locking in of those bars pretty seriously. But it's meant to show that there's zigs and zags in the stock market. And most importantly, the yellowish or orangish line is the value line return forecast, the average return forecast over time. The blue one is the Manifest Investing average forecast for the stocks that we cover. So again, it's as if you took all the stocks covered by Value Line, which is basically 1,700 stocks, pretended you had a stock selection guide on all of them, and then said, based on those stock selection guides, what's the average Section 5 return forecast, known as a projected annual return? And that's what's being plotted here. And when you look at them in aggregate, what you end up with is they all add up to a return forecast of 8 to 9%. So it's kind of in a fairly typical range, not tremendously overbought like the people on TV would have you believe. I think most of us here know that if you look 2 bars back, that was a pretty good dip in the green bars, and we were basically back where we ought to be long term, from a long-term perspective. So
yeah, and I always like to remind myself that every stock has a 52-week high and a 52-week low, and that can be a 20% spread. And so I like to in my alerts, I like to when I'm buying a stock, I like to put alerts of when it falls 10% and then maybe when it falls 15%, just to keep an eye on it if I'm out doing whatever, but the alert is pushed to me so that I don't have to look at my stocks every single day. Because that way I'm not in a panic mode. It's like, okay, I've got things out there that if I need to know something, I can find it.
Absolutely, and it just underscores Hugh McManus's approach of being aware when companies are trading within 20% of their annual 52-week low. He likes to buy his companies as they approach their 52-week low, just like Kim was just saying. You basically vet these companies, you get the companies that you want to own, and when they look good and they've been vetted for their quality and they approach that 52-week low, he tends to accumulate.
And I love his attitude when look at a stock and is at a 40-week low, and I'll always remember when we had the oil spill in Alaska and what that stock did when you bought it at its bottom and then when it came back.
Oh, I can still see the slides he put up on the wall at the convention with the active image of the oil leak.
Yeah, me too. But if you looked at what the active return was, if you bought it on when convention was, and when you bought it, and then you looked 5 years later, you might be having I'm sorry, no, I'm not sorry. I'm going to say a really shit-eating grin.
Okay. Absolutely. All right. So moving on, here is a quick look at our performance perspectives. Again, this is a trailing 10-year look back on most of the entries on this list. And no real changes here. We love to point out that those are active, real demonstrations when it comes to the Tin Cup or the Investing Roundtable at 16.4. Not a bad result for the Investing Roundtable. Kim has been a big part of that for the last, I don't know, when do you think you got involved with making presentations at the Roundtable? Do you remember?
Over 10 years ago?
Over 10 years ago. And we've been doing this for now a little more than 15. So that 16.4 is pretty cool. And we just love it because it's friends getting together, sharing ideas. And again, last Tuesday, in most cases, every month. And we don't have one tonight because we had to do it a week early. But we've been doing it monthly since the year 2010, generating a 16% return. So that's a real demonstration. That's the real internal rate of return, the selections that we've made. The rest of the stuff on here, the companies that are listed here are the 10 most widely followed companies by subscribers at Manifest Investing. As you guys all know, those will also line up pretty well with the top companies in the Better Investing Top 100. And the thing I think is kind of neat about this slide is some of you were there at the campfire sessions before last week's roundtable. Kevin Gologly presented that David L. Babson was one of the originators of the Rule of 5. He did use a Rule of 10, but really the Rule of 5 concept. And he pointed out during that session that we're doing it wrong. That when we talk about 1 outperforming expectations and 3 pretty much meeting expectations and 1 disappointing, that actually refers to income stocks. And what Babson and Kevin pointed out is there's really a different distribution of the Rule of 5 for companies that are high quality with formidable growth. And here it is spelled out for you. For every 10 stocks you study, again, you can just divide by 2 to get to the Rule of 5. 2 will greatly exceed your expectations. Another 2 will exceed your expectations. 4 will pretty much match your expectations. And 2 will disappoint you. So if you take a look at this list, you basically have a couple up here that are pretty dramatically outperforming. And then you've got a couple down here that are not performing very well at all. You can see by these long-term numbers. So there's your first 2. But then you've got another couple here that are okay, better than okay. And then you've got the ones that kind of run down the middle. Your Google, your Fastenal, Visa, nothing wrong with any of these returns, pretty much matching expectations, Home Depot. So you and all the way down, I mean, even down here as far as Home Depot, those are still very strong numbers. So you've got your 2, 2, 4, 2 distribution. So thank you, Kevin, for clearing that up. And it's right there in front of you. The Buttonwood Bulls did drop down a little bit. We'll go into that here in a minute. But pretty good session. And we owe Kevin Gologly our express appreciation for that. Any thoughts here, Kim? Or
No, I just did see where Steve responded with a limerick for you, so I copied it and sent it to you.
Okay. We're limericking again.
You didn't lose that.
Every time we talk about the Irishman, he breaks out. Good stuff. All right, pressing on. In fact, this came up at last week's bull session, and then the next day at the Breakfast Club, I realized I was not reading that little nugget here from Barry Ridholtz's blog about this Mind the Gap, and he's talking about what people who are hyperactive actually do worse than the average mutual fund or exchange traded fund portfolio. That's what it comes down to, and we pointed to these two numbers, 7 and 2. But keep in mind that that's during a period of time where the average stock, pick the value line arithmetic average or the Wilshire 5000, those numbers are up in the 12 to 14 range over that time frame. So this average investor at 7 is right here, and this average rhino is at 8.2. And not to brag, but we've got some pretty good results to the right there. And like I say, that's one of the reasons we really like the roundtable demonstration, because it's been doing fairly well. And this really puts that 8.2 and 7 in a kind of a different context or a different light. So this is what I was talking about last week, Steve, needing a little bit better context. So maybe we cover this with the group tomorrow morning. Any other comments?
I like it. I like it.
Sounds like a great idea, Mark.
You know, it just encapsulates how we do find a way to do pretty well. All right, here's some real breaking news, everybody. Groundhog Challenge. Yeah, everybody's doing pretty well. In fact, 3 out of 4 of you are beating the market now, which is an astonishing number. It's just really cool. I know you're all smart and everything, but wow. Of course, the really important thing is I did manage to stay on the list despite slumping down a little bit down here at number 48. I'm hanging on with white knuckles, and Ken is still in the top 20. But we have to talk about our defending champion, who has spent most of the last several months near the bottom of the list. And I think this might be the largest move this late in the year. We still have 3 or 4 months left, but it's late in the year, and he went in the last week from 189th to 5th. And that's a major move. Like I say, I think that might be unprecedented. I don't remember seeing anything quite like that. So we're going to take a closer look. This is Mr. Gallagher right here during their visit to Antarctica. Well, from top to bottom, again, Richard Corkins is a member of Bob Shaw's Investment Club out in the Central Michigan area near Ann Arbor. And Richard hangs on to the lead. Kay continues up there. Daniel, you're still hanging in there also, man. But the Broad City, the Bauer City ladies and the Broad Assets continue to be at the top of this list. Those 2 3-time champion clubs. Motivated investors is from this area also. So pretty good representation. Kathy Wood has rejoined the list. A lot of very familiar names on this list, from Marie to Betsy. Where are you at, Betsy? Betsy is at 11th. So hanging in there pretty well. Those of us that had a fairly strong technology or AI or quantum computing element in our portfolios got punished a little bit here over the last week. But our long-term outlook continues to be strong. Anything grab you here, Kim? You need to find a stock like Gallagher's to bounce you up the list.
Yeah. Well, I don't know if I've ever had a stock go from 189 to 5. I guarantee you I haven't.
I don't think anybody has. Good stuff. So Ken will be happy that he's still in the top 20. And a lot of very familiar names there. And we're getting along. Well, here is the culprit. And I don't know quite what to think of this yet, but the ticker is Wolf. The company is Wolf Speed. They're obviously in the chip end of things with the information that you can see on the right. Some fairly interesting things going on. This is a company that is in some state of financial strife. So I don't know anything about the overall condition of the company, but you can dig in a little bit deeper. There is some fine print here, but I don't know how many times I've had a company go up 1,800% in one day, but he did. It basically went from 2 to 22. I checked earlier today, it was at 25.5. So he may actually be in the lead. And the other thing is there's some fine print here. I don't know what the value of his shares are going to be. It'll be interesting to see how that, because it's confusing. All of the wire services are a little bit confused about this particular situation, but as it stands right now, he's got much of that gain in his Groundhog portfolio. So pretty wild. And it has to do with paying off some creditors and some dilution that is possibly happening there in a bankruptcy situation. So time will tell. Maybe that's fleeting, but again, I don't think I've seen anything quite like it in a tracking portfolio. So we shall see. I don't think he's with us here today. Is his name on the list, Ken? Or excuse me, Kim? He didn't know I was going to do this. He did ask to be excused from the basement. And I would argue he kind of took care of that himself. All right, so let's go ahead and go on to Buttonwood. Just a quick look in on the Buttonwood portfolio. Our distribution of companies does give it a little bit of the vulnerability to what's gone on in the last couple of days. No problem longer term, but it has come back just a tiny bit. We were actually approaching $5,000, and we have settled back in at $48.66. Again, nothing to be alarmed about, but pretty solid portfolio from top to bottom. I do think you'll see much lower turnover activity going forward. We'll do the conventional raking it over the coals here in a few weeks, but I think you'll see much less selling going forward, and just hope to build a good situation. The overall look for the portfolio, the growth is hovering in that 12% range, which is our objective, to be at least 12, if not higher. And the par has come back up a little bit with the slight decrease in the stock prices overall. So here's a look at that chart that we have talked about a little bit. We are thrilled that we are at an annualized rate of return now at 9.3%. Was a little bit higher a week ago. You can see that the blue line has come down a little bit. That is the balance in dollars. You look over here to see the balance in dollars. And the future value of the portfolio, because of that, and basically a relatively constant overall return forecast for the portfolio, again, looking over here in dollars, that has flattened a tiny bit. But it's also, and again, we don't believe that you want to look at your portfolio week to week as we have done here for this very young portfolio, but month to month, this is going to be an interesting chart, I think, over the long term. It is kind of interesting to see that, it gave up a little bit and took a little bit of a breather. Notice that the projected annual return of the portfolio did get just a small bump to the upside. So you can envision that on a week-to-week basis. Again, we're not encouraging that, but as we scratch our heads over this, we have been looking at this weekly for the last couple of months. This will turn into a monthly thing, I'm sure, over the long term. Any questions on this, Kim, or any thoughts? Hope I didn't lose Kim. Did I lose all of you?
No, you didn't lose me. I just trying to be respectful because I had somebody call me.
Oh,
She's still working the back room though, and the buttonwood bowls, that's still a work in progress. I think I think you should not hurt yourself with that. By the way, Jim Gallagher is not here unless he's using an alias. You know, past history, he might have come in using an alias.
you know, he could be. If you know, it's kind of like winning the lottery. You have to be careful how much you disclose to the world. You know, and since he's our defending champion, and if he's doing that well again, who knows?
Maybe he bought the company.
Well, I wouldn't. You mean the whole thing?
Yeah, the whole thing.
I do have a score update at the end of 5 innings. It's the Cleveland baseball team known as the Guardians won, Detroit Tigers won. There you go. All right. Let's go ahead and press on. Thanks, Steve. Here's just a quick look. This is just a quick update on the utility bill auto pay demonstration. If you're not familiar with it, we started it a few years ago just to show that you could build a mini portfolio of dividend-paying stocks. This was inspired by Ken Janke and something that he actually did with his dad to take the fear out of the stock market. And the idea is to invest in enough, and I know you're breaking into a cold sweat here, Steve. Yeah, the dividends can be really cool. These dividends are used to pay the utility bill, the monthly utility bill every month. So we put $45,000 roughly into these going back almost 5 years ago now, 4 years ago. And that $45,000 is now closer to $57,000, almost $58,000. And we have made every single monthly utility bill payment along the way. So the goal is pay the bills, keep the balance in the checkbook above zero, hope that these do okay. Those are some really good utilities that happen to pay a dividend. And then along the way, we did not make the decision, but a couple utilities were bought out from under us, and we put them into these premium income vehicles, which are a little different. The first one that you see there is JEPI, the JP Morgan Equity Premium Income. That's a monthly dividend payer. And then a few weeks ago, we actually added this Roundhill QQQ. Again, the underlying investment is in the QQQ, but they also do some enhancing strategies to enhance the yield using options. And it's advertised as having a yield, and no, we're not making this up, of 35 or 36% per year. Now, the downside of it, potential downside of it, that everybody talks about, everybody warns about, and it's the reason it's here, is for us to actually invest in it or watch it, follow it, and understand it, is that over time, because of the aggressive nature of what they're doing, you could see a loss of principal over time. Now, at this point in time, only a few months in the hopper, it's actually gained while generating some pretty healthy dividends. But over the long term, the thinking is that it will actually decline in overall value, while paying out this fairly heavy dividend stream. So that we're simply watching it and using it to learn in basically what we do here. So I'm always skeptical when I see something like that 30 or 40%. That is definitely in the too good to be true land for me. So I want to understand a little bit more about it. So far, so good. I apologize, this slide is a little bit busy, but we do want to display for you every single transaction. The ones up at the top are all of the dividend payments and the payments made to pay the utility bill. And the really important column is right here, the cash balance column. That's the one that we have to keep above zero. And you can see that we are. So you can see the actual payments made both from the individual utilities. We did have Pfizer, which we did sell, but here's Southern Company and here's NextEra. And then those weekly dividends that you can see along with the monthlies. And here's the monthly dividends. They also fluctuate because they're using option strategies to enhance the amount. But that's what you see here. This 368 will actually line up with the number you see least it better. Right here. This is that 368 payment, and then this QDTE again, which is something is new to us and we're trying to understand. Again, fluctuates around quite a bit. You can see lately it's been in that 204 range. Here's that number. That's 20.4 cents if you want to think of it that way. But you can see that it does vary based on their actual output or results from their option strategies. So it's kind of interesting. You do get a weekly dividend payment into the account, and we are ready to make our October utility payment tomorrow right here. And what you see down the rest of the page is budget estimates. We are currently projected to end the year about $900 in the checkbook greater than we have right now. So it's an interesting demonstration. Any comments or questions from the audience? Or Steve, this is probably a little bit strong for you. You might want to take an extra sip of coffee. I know you're.
I just took another sip, and my dividends pay my utility bill several times over. So I'm still a dividend person.
Excellent.
Well, and I'd like to say, I don't know about any of you guys, but have any of you noticed that how your, number one, your water bill is like doubling every 2 or 3 years, and your utility bill of your electricity and gas is doing the same? I mean, mine in the last 3 years, both of them, the water bill is doubled, and the HVAC system for the house has probably gone up 60 or 70%.
Yeah, and I don't think you're alone. And you have 2 different residences, and it's probably the same in both.
Now, actually, at the condo, it isn't. Condo has stayed the same.
Yeah,
Really?
Florida electric rates have been behaving fairly well, I think.
Well, Florida electric rates are the NEE.
Yeah, on a big picture basis. Yeah. So,
Yeah.
you know, in the interest of full disclosure, we have in our family account have actually bought these because maybe I'm a doubting Thomas. I have to see this to believe it. So we've actually had money invested in our traditional brokerage account, and these cash flows are real. We've actually demonstrated that on the side with real money in a real account. So very fascinating. Another question we often get: what about taxes? You know, a lot of dividends here, and there have been some capital gains along the way. Yeah, we have paid the taxes also in addition to the utility bill since the beginning of this effort. So that is something that we take very seriously also. These numbers at the bottom are not correct, but you get the idea. We are in position to pay off our tax obligation as a result of these dividends. So good, clean fun. We will continue to learn. Just wanted you guys to see that this is proceeding much in the way that we had thought that it might, and interesting experience. Very different type of investment. All right, so Kim, let's go ahead and get into the best small companies. I know there's some companies on here that we have talked about extensively over the last couple of years, and we continue to have a pretty good number here. We are checking in right now at almost 32%, beating the market by 14. We have a month to go, so we'll keep our fingers crossed. A year ago, we almost lost that big of a lead between the 1st of October and October 31st. So we'll knock on wood here and hope that we don't see any form of a repeat. But once again, here you see a pretty good distribution from top to bottom, and maybe a little bit of rule of 5-ish type distribution. Those couple at the top have been extremely helpful. There's a couple at the bottom that have been a little bit more disappointing, but we continue to have hope for virtually all of those. Those of you that have been with us in other months know that we find cactus frustrating, but we continue to have hope. But
Yeah, someone in the forum has also posted about wolf. George Mackey has let us know that Gallagher's shares, it came out, Wolf emerged from bankruptcy today, and one of the terms was to cancel all previous equity and issue new shares. The old shareholders only get 1% of the new shares, so his value may be totally different tomorrow.
that's why I shared the fine print. Yeah, I think it's 5% are allowed to be given to the existing shareholders. And yeah, their shares were canceled, but were replaced by what I believe is an unknown quantity, which we will know.
Yeah.
Of shares. So yeah, there will be some math.
Yeah, and then someone else, Cheryl Smith, was asking, would Ken place higher if his Nukes NUKZ stock was filled in on the scoreboard?
Yeah, if you're talking about the dashboards, embarrassing confession, I have managed to lock myself out of the car, and the keys are in the car, and the car's running. Yeah,
Currently now?
I cannot get to the Groundhog dashboards to make any changes. So yeah, in the case of nukes, I'm not sure we're showing a value for nukes yet. Yeah, that would affect where he stands. So that's why, the dashboards are for fun. The standings that you see here when you come here every week, where is the darn thing now? Those are official. Those are real. Those are updated in real thime. They reflect every holding in your Groundhog portfolio. They are corrected for dividends in real time. So these are real current minute, up to the minute numbers. The numbers on your dashboards do not necessarily reflect the dividends. In some cases, that's what Jim Gallagher is complaining about. Some of them are uncovered by manifest investing. Some of them are really tough to cover at all because they're so early stage. So, but we do cut, what you see here includes all of those, even the really difficult to cover companies. So yes, Ken would, if you look at Ken on the dashboards, he probably ranks a little bit lower. And anybody that has fairly creative stuff in their portfolios or dividend payers is affected by what I just said. The vast majority of you out there, though, can have actually selected some fairly traditional, widely covered companies, so the differences will be relatively small between the official results that you see here and the dashboards. So we're going to find
Mark,
a
the only thing must have happened with your stock was Ardelyx went down.
Well, Ardelyx went down, and I also have IonQ, which is a quantum computing company that actually has taken a hit also. Okay.
On that subject, real quickly, I'm looking now, and Jim has dropped down some, but I think he's bouncing around here as we speak in the Groundhog scoreboard.
I'm sure. And again, we won't know until we get a final distribution count on the shares that he apparently has been reissued. And trust me, it's confusing. Any brokerage firm or whatever you look up. When I look at it at Robinhood, those new shares are out there at approximately $25 a share. Okay. So let's go ahead and dig into some places to go shopping. We'll probably come a little bit. We're going to take a look at some pretty neat stuff here. Kim likes to shop around amongst some investors who have really demonstrated over the past years and decades a real affinity and skill at picking up some of these smaller companies. So let's go ahead and dig in. This is just a quick look at the type of companies that are on the leaderboard. This is a work in progress. None of these have been selected. This will be monitored over the next several days up until Halloween, and then we will make final selections. These are ranked by their projected return. using Prove, and the reason we use Prove is because there are some early stage companies in here. So as you find a company, we want a company that's in that 10, 12, 14 or higher for the sales growth forecast, and it's going to have a projected return in double digits, or it's not going to make this list. And we will tolerate a company of lower quality, but we want to maintain that at an overall portfolio desirable level of 80-ish at least. So we will tolerate some companies like we have tolerated. Kim and I tolerate Ardelyx. The audience picked Ardelyx last year to Ken's chagrin, and it actually brought home some fairly decent results. So it's a good thing he's not here today, Kim, or he'd be giving us all kinds of grief.
That's okay. Ann Manning has a question for us. Are the growth forecast on small companies in the present forecast, or is that what they started last year? So when you updated this best small companies list, is that growth forecast as of like today going forward?
It should be pretty current. I think there's just one or two on here that are a little bit dated, but this is fairly current, and those other ones will be caught up here within the next few days. When I throw the value line switch, they will all be caught up. Okay.
There you go, Ann. There's your answer. Yeah. Thank you, Mark.
Good stuff. So we've got a pretty good. So again, this gives you an idea. If you're sitting out there and you've got a really hot, exciting company, we want to hear about it, but know that you need double-digit growth and double-digit returns to really have a shot at cracking our final 20. All right. So Kim and I we're scratching our heads over what can we do here today. Let's actually combine some of the stuff that she does all the time, which sometimes can be accused of being a little bit unconventional, but can lead to a lot of ka-ching. There you go, Kim.
Thank you.
What we've got here is starting with Grok. I just picked Grok for an artificial intelligence demonstration. I said, who are some of the best thinkers and investors in smaller, faster growing companies? And this was the answer that came back from Grok. It took it 32 seconds, and it's talking about some venture capitals and other stuff that's probably not directly applicable. But again, I want to show how it could influence where we discover some unicorns, perhaps. So going here, we get a list of names. These are not familiar names to many of us. Some of them you will recognize. A lot of this stuff is early stage. This just reminds me of why we stopped with the Forbes best small companies list, because they started talking about more of these kind of people. But you can see that there are some compelling numbers on here and some compelling companies by mention in the names. I mean, Naval Ravikant is a fascinating guy to follow, Reid Hoffman. But these are a little bit more obscure and a little bit more on the early stage investing, venture capital side of things, and not quite as useful to us. But there are some exceptions on here, companies that these people have invested in early and demonstrated that they've profited greatly from some of that early stuff. Here's a look, again, courtesy of Grok, as to what type of stuff are they looking at today. Of course, artificial intelligence, but this skew towards small cap, which is kind of cool. And the broader context of crypto and hardware for diversification. But again, not terribly useful to us in general, other than to recognize that that's out there. So we're going to turn to, well, here's one of Kim's favorites. You want to tell us a little bit more about Pat, Kim? I know you've been following him for years.
I found Dataroma only because I kept reading and doing research, and I kept seeing Dataroma.com coming up when people were talking about how they'd done their search. And so I went in there, and what's fascinating to me is they have a list of like the top, let's say, 100 investors. And then they also list their top 10 holdings within the portfolio. Now, many of you may not remember Pat Dorsey of Dorsey Asset Management, but he was the guy who actually started at Morningstar.
Mm-hmm.
And he started at Morningstar, and he started doing some of the analysis there. And then after a certain time frame, he just decided to go off and do his own thing. So whenever I check every quarter, I like to check, number one, what are they selling? Because maybe am I not recognizing something I should sell? I like to see when they have a buy. So ENOV, I have no idea what that stock is, but he's buying it. And the reported price was 31.63. The current price is 30.18. So in other words, if I did an evaluation on the stock, because I was able to get a creative idea, and he had put 80 million into it, and it's even cheaper now, which makes me think, what's going on here? The 52-week low was 25.47, and the current price was 30.18. So it's dropped down. It from its low, it's gone up about 20%. But if you look at its 52-week high of $50, that's a lot of growth going forward.
Yeah.
So then we would do our evaluation. Yeah.
Yeah, and Pat, for those of you that aren't familiar with the name, again, as Kim said, he worked at Morningstar. He was really big on the moat concept, so he's a higher quality type investor. And I think what I think is most important here is the fact that you've got a Danaher and a Google and ASML booking. I mean, he clearly is pursuing the same type of companies that we pay attention to. And as Kim has shared, there's some powerful information on here with respect to what he's been doing lately and some pretty discrete details. I'd probably also want to have a look at this SEMR. I've never heard of the company, but might want to take a closer look. So again, this is just one slide from one individual on Dataroma, and we're gonna show you some other names that you might want to go to dataroma.com and just dig in and see what you might be able to discover. Here's a quick look at the company that Kim pointed out. Yeah, it's got a high return. It's going to have trouble making our list, though, with a sales growth forecast of 8%. Okay, so again, really quickly, you just run the numbers on, through your screens or tools and come to a conclusion. Good return, probably not quite enough when it comes to the sales growth. This is okay here also. So we'll see. Here's just another example demonstrating how Kim digs into Dataroma. Poland, we've talked about quite a bit. Any thoughts on what you see here, Kim?
Well, yeah, because I know CoStar, and what's really interesting for me is, not that I get excited, but when you have a rhino who has added 1,128%, that gets my adrenaline pumping. But it must be, I'm guessing it's a very, very small cap, because the change to his portfolio, it was only 0.01.
Mm-hmm.
When you look at seeing how he's adding Adobe, CoStar, Alphabet, and the four at the bottom, I've never heard of. I don't know what they are, but it makes me want to look at these small cap, because I'm guessing they're small caps, to see what's going on. And it's a great place to just get ideas. And as the last Mark told me that he grabbed all these slides and he picked up the ones that were just basically the buys or ads. So you can also, when you look at that, you can see what they bought these stocks at, what the price was he bought it at. So you're going to be able to check the comparison of what it is now if you're choosing to want to try to buy it.
Yeah, what I find interesting is there's a lot of very familiar names to our community. This On Holding, Steve Emmerich and his guys that salivate over the shoe companies. That's that shoe company that's led by Roger Federer, and obviously they doubled their position in that company. So maybe we talk about that tomorrow morning. But ServiceNow and Adobe have been very high on the interest. Google, of course. And Argan is actually one of the companies in this year's consensus selections for the Groundhog. So interestingly enough. So again, just showing you how you can drill into one of these. And by the way, this is mostly a she responsible at Poland. We talked about her in the past. Okay, same question, only this time using Chat GPT. And Chat GPT likes to really be nice to the person asking the question. So tells me it's a great question. But let's talk about some other people that we might kick around. And here, these names are going to be a lot more familiar. Notice that we have talked about a number of these mutual funds in the past. Bill Miller is renowned for having the longest winning streak for a fund up at the top. And he also does mention outsized opportunities in the smaller company arena. So we'll take a look at that. What do you see here, Kim? What any of these jump off the page at you?
Oh, I like Chucky.
Chuck, yeah, Chuck's one of your boyfriends.
Yeah. I like his three-legged stool that he has. Sequoia Capital, how can you ever go? They've always had great returns. New Middle Mountain Capital, I like because it's the middle market. And then the Shore Capital Partners, that makes me curious because it's the microcap and smaller business space in the U.S.
So these are just all places you can dig in and see what are they buying lately and what ideas might that generate. And I think I grabbed a Chuck Akers slide, so we will look at that. And again, just giving you some stuff to sink your teeth into. Now, Bill Miller has recently been talking a lot about the smaller companies being an opportunistic environment, and it's right here. We also say that here. We expect the small and medium-sized companies to do better in the not-too-distant future. We're hopeful for that. And down at the bottom, you can see there are some interesting companies here. Well, this one's a favorite in our house, by the way, Stellantis. And here's that Western Alliance. And yes, Kevin Galogli, I still hold my shares of Western Alliance. And this one could be interesting to look at.
Ross Meredith is happy with his Western Alliance.
Who is?
Ross Meredith.
Oh, yeah. He certainly knows his banks. And of course, we've got some health stuff here.
I think Matt Spielman, wasn't he a Western Alliance core promoter?
He was. In fact, he's been so successful, he's had to trim his position in his portfolio. So yeah, that's has caught our attention as a worthwhile bank to study and understand for sure and own. All right, so here is again just a few more lists, including some of the stuff they've been interested in. So we're not going to go through them one by one, but you can see a whole lot of names on here that suggest we are sniffing in a pretty interesting place. This year's leader, Credo, is showing up here. Of course, you brag about the stuff that works out well when you're in the barber or hair salon chair, but from top to bottom, there's some companies on here that if you have not taken a look at them, this can be a wonderful place to look closer. This, of course, is that Brown Small Company Growth Fund. That ticker symbol is not on here, but it is BCSIX. We looked at it 2 weeks ago. They have a tremendous track record, but from top to bottom here, these are some people who have demonstrated an aptitude and skill for picking smaller, faster-growing companies. Could be some interesting opportunities, and we will tackle anything on here that isn't currently represented. I mean, check out this one up here, presented by Candace Baker at the April Roundtable. Pretty good story.
And I really loved what your Riverhood Capital showed us last week. Was it last week or 2 weeks ago?
Yeah, this one, I'm not familiar at all with these guys, but I want to look closer. Their track record is brief but strong. So it merits seeing what are they thinking these days. And of course, we will be going through the Vanguard Small Cap Universe Fund, which is a sister to that one, pretty soon. So here's some of the other stuff. I just wanted to demonstrate that when you get these results from an AI engine like ChatGPT, they give you these links. So if you want to dig in deeper to the specific item being mentioned here, you can actually click through and get some of the background or source material. And there are some interesting things on this page. Again, the same type of thing of just triggering potential ideas to dig deeper on smaller companies. In this case, I'm going to go ahead and click on Yahoo Finance, and they take me straight to an aggressive small cap. We don't use the word cap here usually, but that's all we can do when we're shopping out in this environment. But there's some interesting companies here. I've not heard of. I guess I'll call that Tigger, not Tiger. Tigger. And by the way, the Tigers have taken a 2-1 lead over Cleveland in the 7th inning. How's that for a segue in timing, Kim? Here's a light. Don't know anything about. Red Wire might be a company to look at. Sally. It's often showing up in some of our areas. It's a company that does bounce up and down a bit.
Yeah, I know about Sally. It's cyclical. You wouldn't think so, but you just have to know how it is cyclical for the price when it's down, and then when it gets up, where it kind of gets as far as it goes, and then you just sell it and wait till it falls back again.
So when you've looked at it, is Ulta and Elf also cyclical, similar type behavior or not? Or do they behave differently? I don't know.
I would have to say Sally is the most volatile.
Okay.
Elf is, I don't know as much about it, and Ulta is, the fourth quarter is always a bang up quarter for them because everybody's buying their makeup for the holidays and giving gifts to that and all that.
Right. So again, what we're showing here is just taking a Chat GPT result and drilling down into the reference or source material. Sometimes you can find some interesting nuggets as you do that. So we've made it all the way around to Chuck. And I think this makes your case, Kim, as people here in the audience look from top to bottom. Those are some names that rhyme with the things that we go hunting for. So I'm going to be paying attention to where he's buying or adding as we do this exercise for sure, just in case a smaller company is coming into the picture. Maybe this one right here is one that might get quite interesting. So I see why you like to track this guy, Kim.
Yeah.
All right.
Kind of reminds me of our methodology, really.
So with that, here's another Bill Miller output just to show you what has he been adding to lately. Again, looking for smaller companies. I don't know much about this one or this one. Basically want to take a closer look. We have talked a little bit here about Build-A-Bear and the renaissance or turnaround that they seem to be in the middle of. Here's Jackson showing up again. Some stuff that we might take a closer look at. So with that, just a reminder that we will be covering the Rule Breaker Investing book that has now been out. I did, by the way, listen to you can go to YouTube and listen to their podcast. And he did basically a snippet from the book for the last 52 weeks and put it into a compendium or a collection. And I listened to that yesterday and definitely rhymes with what we like to talk about. And he did it in 40 minutes. Here's just a quick reminder that we will be talking about this after the session. A number of us will attend it. This is the update on the GLP-1 companies that are out there. And I look forward to hearing somebody else talk about the industry in terms of potential and challenges going forward for obesity care. That's coming up. And again, your reminder, along with some of the topics we have covered in recent bull sessions and roundtables, they are archived on YouTube. Go to YouTube. This is that campfire session that you heard mentioned earlier. And then, of course, the most recent bull sessions, especially the ones that have the little rabbits cropping up, feature nuggets of the other type of stuff that we've talked about. Here's the Nick DiVirgilio moment of pain for me. You can see, Nick, that your suggestion to buy semiconductor stocks was a pretty good one. And it doesn't matter which one, you just buy them all. And with that, here is some undocumented, unauthorized So capture of Ken and Natalie up north, ziplining. Unauthorized.
Did you
I may
happen
have
to see
advantage.
Steve's response?
I may have to use that image there, by the way.
It's
Just
coming your
forewarning.
coming your way. We can have some fun with it tomorrow morning.
Yep. Quick question, Mark, from Ann Manning.
Uh-huh.
We were looking at the small company list from last year,
Okay.
and she was wanting to know if those forecasts were from last year or if they've been updated to this year's. In other words, current forecast on the old list.
Let me think about it. Those are current. So
Okay.
in the case of, for example, let's say Yeti, you see down here a little down the list, there's no way that it made the list at 6. We probably used a growth estimate of 10 or 12%. We can go back and look. It has changed. And, again, notice that the ones that have the least persistent sales growth forecast are at the bottom of this list. Okay, so those are current growth forecasts. We can stack them up against what did we think was going to happen last Halloween, what is happening, and perhaps draw some conclusions as we try to pick this year's companies. So great question, Ann. Thanks, Steve. So with that, anything else to add, Kim?
I don't think so. I hope everybody's enjoyed the session today, and go play with Dataroma.com.
Yeah, it's an excellent source. I think you'll enjoy some of the stuff you're able to do there. Thank you, Steve. Thank you.
You're welcome. One quick comment. In the chat box, I put in a portfolio from that Dataroma,
Okay.
and it was Warren Buffett's. Warren Buffett's. It's not a small company, obviously, but if you want to click on that link in the chat box, it'll take you to Dataroma and Warren Buffett's.
Yep, it's a good place to watch what they're up to. Okay, so with that, we'll sign off. We'll see you back here next week. Thanks for joining us here today. Good luck, and keep those exciting small company opportunities coming. And for those of you that roll out of bed tomorrow, tomorrow's Breakfast Club will be on at 9 p.m. Eastern Time. I think that's 8 Central Time. Is that correct, Steve?
That is correct.
And if you'd like more information on that, send me an email or go to the Heart of Illinois chapter and reach out to Steve directly at Better Investing. Thanks, everybody.
Afternoon, everyone. Take care.